Well, hello folks, I'm Ellie Little and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today, what might it tell us about the coming days. I do this show 4 times a week, every Monday through Thursday, live here at 9 o'clock Eastern Time at the base of the Rocky Mountains. And folks, it was a rocky day in the markets. I don't think I've seen one like this for, what is it, maybe 3-4 months at least. A down day of this magnitude. Dow drops 317, 16,563. The S&P's almost 40 lower. Just look at the numbers here, 2% or more, pretty much across the board. Gold gets whacked for percent itself, silver the same. The only green I see, UNG, DBA, I guess those are just so oversold that they have to bounce at some point. And that dollar just keeps heading higher. So big down day, first day we've seen that in quite a while. And you know, take it for what it's worth. You basically finally got a sell-off in these markets. Now, I've been calling for a down day for, I guess, the last 2 days. Looked like we were going to get one, then looked like we were going to try to go higher, and then last night it looked like we were going to try to go lower again, and lower we went. And in a rather serious fashion, you break 3 swing point lows, one after another. Typically when you do that, you're going to get carry through. You're going to get carry through for 2 to 3 bars. And carry through can be either sideways, right? Some sort of sideways action, or it can just be simply farther down. And this is set up to try to trade a little bit lower, it looks like. So you had volume expansion, you do 41 versus like these big bars back here, where there we had, what do we have there? 43. So pretty much the same volume on the way back as those couple big spikes that we've had before. When you look at it from this perspective, it's a pretty ugly scene as of tonight. But we've already finished off a small ABCD structure, more than finished it off. And we've pressed now, if we look at it on the weekly, we've pressed back and are going to come back into the support zone. Now remember, I talked about this before, there's really nothing but air underneath this market. The only real support you have is on this bar on the weekly. That's 1930.91, so basically 1931. That's where we went today. We went right into it. On the weekly, we're going to end up with more volume, it looks like. That's 162, 136, divide that by 4. That's a little less than 35. So tack on 35, you're about 171. So it's going to be a little heavier volume. What that suggests to me is we're probably going to see this market come into that area, probably try to trade sideways, and then potentially get some sort of a bounce. Now tomorrow is the 1st, and tomorrow also is unemployment number. So, and you're going to get carry through around the world tonight, finally, right? You finally got something that's going to make others wake up and say, okay, there is some risk out there, because so far nobody's felt any risk anywhere. So, you know, it just seems to me like you're going to get some sort of a sideways move, more so than more carry through here, even though we broke 3 swing points, and that's only because of how fast we've already extended. We may get a little bit more push, but for the most part, it looks to me like you're going to get a bounce and do some sort of sideways action. That's the way that's set up tonight for me. Let's look at the rest of them, though, and see if we can get a clue. Okay, so NASDAQ Composite is coming after its swing point lows. So I'll tell you what, let's do it a little bit different. Let's go over and look at the Dow first. So Dow does the same as the SPX, right? Blows out all the lows. Dow's down over 300. And on a weekly, coming back into a swing point high. And that's going to be a retest regen on the Dow. Now remember, we had a retest regen on the S&P 500, and it was unable to hold it. So this is the retest, the first retest regen. It's after 6 bars, which is a different story that says this thing should try to bounce out of here, right? So you have the Dow wanting to bounce on a weekly. You have the daily multiple swing point lows. Good extension already. Again, that looks like it's probably going to trade sideways to up, not farther down off the bat here. Let's go to the strongest index, which has been the NDX. It looks like that NASDAQ, the composite we just glanced at, and this one's got the volume coming back, coming into support, and it looks like it's going to break that swing point low, 38.94.56, and did. So we have a break here. So you got a trend transition here. So, okay, actually there's another thing we didn't talk about that probably we ought to point out. You just went to bearish here, right? You just broke 3 swing point lows. That's bearish 3 times. Well, sideways, bearish, bearish. Same thing on the Dow. So all of a sudden, you know, where we couldn't ever go sideways, even change trend sideways, now we're bearish on the short-term time frame. NDX just broke here. That goes sideways. This looks to target this little support area here, so this will be support, probably holds in that support area. And if we look back at the NASDAQ composite, that one also went sideways today and right into support. That one actually looks like it's going to try to break or at least test the lows. So a little bit farther on it. And then the Russell, which has been the weakest. So the Russell follows through finally on the ABCD structure. So that structure is from here down. That's the biggest one. Takes you right down around 1100. And then you got 2 more inside of it. And these about 1110, 1112, and the smallest one is the one today. It's almost done. So this looks like about another 10 points lower, 10 to 20 points max. Russell volume expands, and it does look like it wants to come in. We were talking about this last night. It looks like it wants to come into that high. The high there is, I think it was 12, if I remember right. 10, 11, 1111. So that looks to be the target, about 11,011. Okay, so indexes. Could get a little bounce tomorrow, but I don't think it's going to hold. You're probably going to see it come back. Maybe that bounce comes off the numbers in the morning. Or maybe you get a little sell to start with and then a little bounce. But these things have broke now. It's going to take a while to repair. That's technical damage. That doesn't just go away. So it's going to take a while probably, and I know everybody's probably thinking V-shaped reversal because we've been, you know, V-shaping ourselves to eternity. But, you know, when you start breaking multiple swing points, it's a little bit different of a story. So let's pop over before we go to anything else and see what the world markets did. Now, I'll start in Europe because Europe was the weakest. So Europe, this is the CAC. CAC's volume expands, blows out 2 more swing point lows. And that wants to trade down into the highs of the lows. 42.28. We're at 42.46, so not that far away. And volume's going to be light coming into it. That looks like where that's going to try to bounce from. Now this is interesting on a weekly, because on the weekly now you actually have ABCD structures down now that take it much lower, right? Takes it all the way down to here. So more than likely you catch support here on the weekly, which is just below where we're at, and grab it, you know, maybe work sideways, I don't know. You got the ABCD structure down, but a lot of this is what's happening in Europe, and it could get worse or better depending on what happens. And what I'm talking about is Ukraine and Russia. Let's look at the other weakest one, which is the DAX. And this one definitely is broken. It breaks another swing point low. And that low is 93.67. We're at 94. And again, You're coming down, fast price destruction, no real big pickup in volume though. And the high of the low here is 93.82. That looks like where that one's trying to go. And it looks like it will catch support there. So those are getting close to buys. FTSE was the strongest one. FTSE's going to come down and test the lows on the daily. Over in Asia, we got the Hang Seng. That one's going to try to come back in finally. The Nikkei, that one actually did start to come back in. And that actually is a good sign. It left volume at the top. If it doesn't come off with huge volume tonight, it would be pretty positive. When these come back, they're going to set up retest regenerates. And let me look at, real quickly, look at the All Ordinaries and the Toronto, since those were skyrocketing. That one still made a higher high with volume, and Toronto, okay, so Toronto finally comes off. That will come back and do a retest regen. So world markets finally starting to give it up a little bit. We talked about Asia last night, probably going to slow down, and that's going to be a negative. Thought Europe would try to bounce, but they blow away their lows. They're going down to lower numbers now. But they're not far away from areas that they should try to catch a bounce. Sector-wise, the sectors we saw when we were looking at them last night, there was only 2 that were positive. The rest were printing negative. Here's the IYTs coming into this big bar. It's sideways now. So remember, I've talked about the fact that, you know, when you start seeing these sectors start to turn, and what I was talking about is, you know, you got a sideways here, you've got a bearish there. You know, as these start to turn, they all start to turn, right? They all will start to turn. If you remember, industrials were first. Eventually, you got a sideways. I think it was, I don't remember which one, but it was eventually one of the other ones. Tomorrow, you're going to have almost all of these turn, almost nothing bullish. We just saw this is bearish now. This is sideways. This is bearish. We've already been bearish here, and all of these are going to turn. So IYT goes sideways. IYT is fixing to catch some support though, just below here. SOX. The SOX sold off pretty hard. Volume expands. That low is 82.68, closes at 82.64 underneath. There's nothing but air. It's going to try to come all the way back to the swing point high, do a retest regen. That's going to be the buy if there's going to be one, 80, around 80. XLB comes off big volume. This is 3rd day in a row. Not big volume, but big wide price spread. Breaks 3 swing point lows just like everything else. Actually 4. That definitely turns it bearish on the short-term time frame. And but look at them on the weekly. All of them are going to come back. I got a question asked of me today, you know, is this a crash? Well, no, I don't think it's a crash, because you can't crash when you're, you know, you have no setup on the intermediate term time frame, and almost all of them look this way. All you're going to do is finally come back and do a reset, which actually is what you want. So, you know, it's way too early to start thinking crashes and stuff, or even bear markets. These are just markets that have gone up for far too long. Folks, it's been 2 years since we've had anything happen. So just to get a little sell-off and maybe come back and change the trend on the intermediate term time frame, the first time that happens, that's actually a positive, not a negative. XLE breaks 3 swing point lows, goes to bearish. That one wants to come back, and there's nothing underneath there. It's going to come all the way back down to the support. You can see support up here, the big bar up. That's where it's going to target. So I'm not going to go through them all, but I think almost all of these you're going to see them change. I do want to see what the financials did. Financials break 1, 2, 3, 4. Yeah, this is ugly. This type of action, even though longer term, and I'm talking about, you know, a few weeks, it's going to be probably positive. In the short term, it's going to be painful for anyone that has bought into it, because just think about it. If you bought into it in July, you're underwater, right? Actually in June. 1st of June, in you know, 3 sessions now, basically 3 sessions, you've taken away all of June's gains. And that's true here. It's true on almost everything you see. So anybody that bought since the 1st of June is underwater if they didn't, you know, flip out of that stuff. And some of the safety stuff is just getting crushed. Here's the XLP. I mean, just totally demolished, right? Back into a swing point high. This will be a retest regen. These are going to be important retest regens, right? As these come back in, these give us our measurement points. If they can't hold this, then this is a lot worse than you think. A lot worse than I think. But that will be the test. That's the sort of stuff we're going to look at as these come back. Over in the Ox markets, let's take a quick look. I didn't really get to look at these today at all. So EEM should be coming down pretty hard. It did. Volume expands. They blow away all that. So again, all the way since June, even here, you're underwater any late buys. You're back even on the rest of them. I want to look at the FXE because these currency moves have the tendency to cause ripples and large ones. And nothing big there today. Let's look at the bonds. Bonds have been coming off hard. Today it actually held up pretty well, considering all. It came into that area we looked at as the target, had more volume, and flipped around, but this is not going to go very far. This looks to me like you're going to see this tested again. So bonds maybe get a little bounce tomorrow, but then they come back. Silver, and silver is, you're going to try to trade down to that low one more time, and gold real quick. Okay, so gold breaks. Gold breaks underneath that low is going to fill the gap finally. About 123 is where it's headed, 122.80 or so. All right, so that's the kind of the general feel here. Tomorrow, you're going to get some sort of a bounce. And the question was, will you get anything that holds for a while? These markets have been bullish far too long for people to walk away. You know, they're going to look at 2% down and think it's a gift. Of course, if they stick around too long, they're going to wonder why they got their gift. Because the technical damage is there and it's going to take a while to repair it. All right, let me see if I can take a few questions and then dive into this a little bit deeper. I've kind of changed the format as best I can to you know, give a quick review of what's happening, and then anyone that doesn't care to hear more details can wander off if they choose. And if they do want to hear more details, great. I'd love to take questions and answer them. So let's see here. Tommy says he wants to know about a buy point on some of the big tech leaders. If you think about tech, right, in the weighting, you've got 33, 34% in 3 stocks. Apple's one. And so let me actually pull up my tech board and then we'll take it from there. So bear with me just a second. Let me get these on there. So Apple, Google, and Microsoft are the big ones. And then the other big piece of the index is the SOX. So let's start with Apple. And if we look at Apple, so Apple comes back. You know, Apple's actually at a buy point on a short-term basis. 95.17, you're back almost into it. You don't have the volume. So you come down, you don't have any volume. So on a very short-term basis, that could be a buy. But this is a flip buy, right? I mean, you buy it, you try to get a flip on it and turn it around. And it's not in any danger of really blowing out a bunch of stops. So Apple looks pretty good, even where it is right now. So Google actually came down a little harder. It's going to go after a swing point low. It already broke this low, so it will transition to sideways. That would make it bearish. Yeah, let's see what the weekly looks like. About 565 is probably the first spot. And then, of course, you see on the charts here where the others are. So about 540 after that. 565. Get you back into here. Yeah, I would actually think a little lower looking at the daily chart. So if it gets under these two swing point lows here, it's probably going to go deeper. So if it pops up underneath here and here, right, that's going to give it a little juice to the downside and push it a little bit deeper. So I would think you'd get it around, you know, the 550 mark or so. But I still like the chart. I think Google's a pretty good buy. And looks Microsoft. Microsoft was, you know, just charging higher and higher off the Intel, the Wintel stuff. And we'll look at Intel next. That's another one to look at because that's a nice strong stock. But Microsoft now, of course, is getting beat up in China on the Chinese are coming after it with monopolistic charges. So it's getting hit back down. So it left volume at the top on the weekly and on the daily. Microsoft's going to be a nice buy as it comes back into this high. So that's 42.29. So that's the big three. And while we're here, because Intel's so bullish, let's take a look at that one too. And the first spot is here. It's the lows, 33.21. Hasn't tested it yet. So just a little drop up underneath there probably gets bought the first time unless the whole market's in a free fall. And I doubt we're going to see a free fall at this point. Yeah, some more pressure. It's going to take a while to repair the damage, but you know, there's enough strength in the big stuff that matters to keep things elevated, even with the damage that's done and even with all the divergences that exist. Last night I talked about all these divergences, or maybe it was the night before, you know, where, you know, I look at trading signals, almost none, and that's because everything's so extended. Most of the post-earnings plays, bearish, right? Look at the trends, the qualified trends across all stocks, more bearish than there are bullish, yet you're sitting at all-time highs. I mean, that doesn't add up. That's divergence. That's huge divergence. And finally, you know, you're seeing this thing come down. And the only thing I'd want to point out here is that everybody is going to want to buy this thing, right, as it comes back. I mean, let me go back to the index real quick. I just want to point something out that's critical to understand. And that is that when you have a market that goes up as long as this one has, and I'm going to pull up the S&P 500 again. When you have a market that goes up this long without any major correction, okay, what you're going to see is anytime you get these pullbacks, here, 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 again here, and these are like 2-3 percenters, right? I mean, they're not huge. I mean, you could do the numbers, but I mean, just take this one, which is probably the largest one I see on the board. 1850 back down to 1737. So you took off 120 points. That's 7%. That's a pretty decent drop, right? 7%. And that was back in January, February. Okay, so 7%. What do? They V-shape it straight back up. Do you really think they're not going to buy this again when they get the 7-8%, if they get it, or 5 or 6%? Do you really think they're not going to do that thinking this is what's going to happen? That's what they're going to think. Now, what's going to be an issue is if it doesn't happen, right? Not the first drop. It's not the first drop you worry about. It's the retest that fails that you worry about. Because then that's when people start saying, oh, wait, this is different. It didn't V-shape to the moon again, right? That's the one you have to worry about, not the first one. You know, I mean, the first one, it's a wake-up call, but it doesn't matter unless something happens. And what can happen? It can fail to get higher on the next leg up, and that's when things can get much more serious. And you can go back and you can see that in 2007, 2008 when you had a crash, right? Where more and more things got weaker and weaker and they didn't regain their strength. And then you had some on the intermediate term time frame that started to break, right? And then eventually, right, that led to a huge spill. And yeah, those things are possible, but they take time to develop. I remember in 2007 trading against the market, right? Because I was worried in 2007 that the market was going to crash. Folks, it took until October of 2008 to crash, or September. I mean, it can take a very long time for those things to play out. So, you know, don't think crash yet. It's a little bit early for that. All right, let's see what else we got here. IBB, let me pop all these things in and see what we got. All right, so no quick bounce, but long term. Yeah, I mean, you're talking about long term on Google and Apple. Look on the weekly charts. I think you're a member, Tommy. So, you know, look on the weekly charts. Like here, we're looking at the GSPC. I would probably go off the indexes. Wait on the indexes to bottom, and then look at your stocks that you're really interested in and try to get into them. That would probably be the safest way to do it. Okay, so IBB, JNJ, CRM. So let's pop into these real quick with what little time I got left. So IBB is the iShares for the biotech. So they tried, and I think I talked about this one last night. They tried to break out. They were unable. They failed. They come off today, come off with a little bit of volume. Now here's the big test, right? Is can they get into these big bars? They're back into the tops of the bars. If they don't get down here tomorrow or Monday at the latest, then they're gonna hold this range is what they're gonna do, right? But if they get down into here, they'll test these bottoms because they got volume laying down there, and so that's really the setup here. So IBB, I watch to see if it can get into these bars. If it gets into them, it's going to the bottom because it's got volume down there. It becomes a magnet. J&J, Johnson & Johnson. Let's see what this one looks like. Okay, so we break and we don't have as much volume. So you're breaking here without as much volume on the daily. And what are you trying to do with Johnson & Johnson? Is this a long-term thing you're looking at? Yeah, this is going to hold for a while. Okay, you got two things going on. A, it's going to hold for a while just because you've got these huge bars on the way up, right? So you take the top of that bar. That's what it came into the last time, right? As it came down here. It tried to come into that bar, didn't have the juice. Now it's coming down again, doesn't have as much juice. This thing's going to flip around, and before it's over, as long as the market holds up, it's going to go all the way back up here and test this again. And then, assuming that their earnings are not good and so forth, right, then you're going to see them probably come back down again. But this one's been bullish for a long time, got some nice big strength bars. If I'm a buyer, this is the buy point. That's where it's coming to, and it's setting up as a buy right now. So I don't know that I'd jump on it today, but it's setting up as a buy. And then the last one, CRM. So this is the tech Salesforce. Okay, so Salesforce comes back. Really nothing here. Yeah, this doesn't look bad at all. This is also a nice, decent chart. There's better ones, but this is not a bad chart. I assume you're thinking about buying it. I wouldn't try to buy it here. You have some volume down here. It never got tested. I would let it test. What you really want to do is as the market, you know, like I just said, the market's going to take a little while to correct. And as it comes back down to test this support zone, you got two swing point lows laying there. If it breaks them, it'll easily get back down to this one. So you really want to monitor it into this zone and see how it holds, if it holds. If it doesn't hold, stay out of the way and think about it down here. And let me see, was that it? That's it. Okay, and I'm out of time. Perfect. Folks, I do this show 4 times a week. I also do it on Sunday. If you're a member, of course, you have a lot more material that I make available, in particular the watch list and so forth. What I would be looking at is, you know, let this market play out a little bit. Don't be in a rush to go buy it. If you're going to buy these dips, and you can buy them, but you've got to flip them to start with, because they're not going to go up and just, you know, too much damage was done today. It's not going to go straight back up. Well, it shouldn't go straight back up. I've seen it go straight up too many times, so I should never say it's not. It probably, you know, more than likely is not going to go straight back up. So you get the bounce, right? If you're buying this stuff on the dips and you get a nice buy-in somewhere, you want to flip some of it at least, probably all of it, and then let it come back down. What you want is you want the retest to tell you, and you want some of these retest regens to show you there's buying interest. Once you know that, then you know you've probably got the end of your correction in sight and it's worth doing something. Until then, you don't know. Right? That's the way it sets up. Folks, have a great night. Again, thanks for joining me. And I'll see you next time. I'm LA. This is, and it was, your daily TA wrap. Have a great night. Take care. Good night, folks.